The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX here on a shorter-term time frame today. We've got to mix it up here, otherwise you guys will probably fall asleep. But this is the 15-minute chart on the German DAX, and you can see the really nice double top with the ABCD pattern that is there. Folks, that move down that we've had today, almost 1,000 points. That's a big-time money because that's $2,500 U.S. money instead of with the E-mini S&P. They have a mini euro too, or mini DAX, but the big DAX is that's big time. So that's a huge move in the German DAX. And if you remember from yesterday, we were looking at that longer term pattern, which was the 4-hour, and that was completing the longer term Gartley. We're seeing the same thing, of course, in our stock index futures today that I'll try to cover a little bit later. But first, I wanted to bring your attention to the FTSE because it did exactly the same thing. This is a 15-minute chart over the last several days. That's a perfect ABCD pattern. You can see the 3-drive pattern. That's a sort of a mini pattern that he's put in here, but it still matches up with the ABCD. And of course, it dropped 80 points in the FTSE, which is not a lot, not compared to what we have in the German DAX, but it's still a substantial amount. Couple things to pay attention to as we come in here today. Take a look at the Feb cattle, folks. We're up in an area where there should be some pretty strong resistance. We've got a 3-drive pattern, A, B, C, D, bada bing, bada boom, all the stuff that's in there that you like and love, and maybe not love it so much if it doesn't work, but that's what it looks like in the cattle. It's getting very, very close to being overbought, and that means it probably would be due for a correction of somewhere between 5 and 7 cents if, in fact, we do get that. Now, we've had a little bit of a heads up from our friend Mr. Rich Anderson of Anderson Capital Management, now semi-retired, still working 18 hours a day. Let's take a look here at this high grade. That's not high grade, boys. It's high yield. High yield, junk bonds. We had the head and shoulders back in April through August. Absolutely perfect. Shoulder, head, shoulder, time is correct, price is correct. And then we had the move starting down. And then, of course, we had the big failure at the 1.618, and the market broke down into that December 26th. Now what's happened, you'll see this monster rally that we have going on here in the high yield bonds. This is due 90%, Rich said, to the fact that the price of crude oil has gone from 42 to 53. And most of these bonds, these high-yielding bonds, are in the oil sector. And that's why it's so heavily weighted there, and that's why that rally is so very, very strong. So I think it's important to keep an eye on it. We've gone from 52 all the way up to from 42 all the way up to 53. And as you recall from last week when we were talking about this, we were looking at that crude oil down there because the 61% retracement came in at about 45.20. We went down to 42.50 one day during the big collapse of December 26th, and it immediately backed up against it, and now we're trading at around 53 this morning. So we've had a better than 25% rally in crude oil in a very, very short period of time, and coming off of that long-term 618 on the weekly means that you ought to be watching this for a pullback with a nice little ABCD formation. You might get a spot there to get a low-risk entry into the market. So we'll be paying attention to it. All right, I think the best thing to do today is to take a quick look at the markets in general. We're going to start out with the one that we got from our good friend Mr. Z in the Tiger Den. This is the Wilshire 5000 index. you'll notice that it's made a perfect ABCD pattern as of yesterday. That was a 61% retracement off of the high. The ABCD structure is absolutely spot on, mathematically correct at 26,859. So that's one that is completing. The next one that we want to look at, of course, is the, let's get it up here. Let's get it up here. Where is it? Where are you, Mr. NASDAQ? Here we are. Here's the NASDAQ. The NASDAQ is interesting because here we have the Fibonacci numbers hitting spot on at 6630. Excuse me, 6650. And then we have backed off just a little bit. Now you see those smaller ABCDs in there. They absolutely are a little bit higher because the ABCD measures to 6720. That's 100. That's 100 points. That's a lot of money in that. So you'd have to be very, very careful in that one. But it hit the exact number on the Fibonacci. Remember, the ratios have more importance than the patterns because mathematics has greater importance than geometry, as the words of Mr. Albert Einstein. And then, of course, the other one that is really super important, and that, of course, is the New York Stock Exchange Index. And that one is flat out spot on ABCD. And all I have to do now is to find it. I had it here just 10 seconds ago. And 10 seconds is a lifetime. And by golly, it has disappeared. What did I do with it? What did I do with it? What did I do with it? Doggone it. Shut the front door and raise the rent. Son of a gun. I don't remember what I did. But by golly, it's not here anymore. Shut the front door. Boy, oh boy. Well, I'll bring it up. It's got to be here. I mean, it cannot be any place. Here is the, well, I did the E-mini, didn't I? Where is the NASDAQ? This might be it here. Here it is. I got it. Oh, it didn't take me a little bit longer than hopeful. Here we go. Here's the New York Stock Exchange Index off of the bottom on the 25th of December. Boom, up we went, ABCD, almost exactly at the 61% retracement, 59 and change. Just a little bit higher today would take it exactly to 61% retracement. And we've been rallying for 3 weeks here. So we are just about ready to head to the downside. And over the weekend, I'll be updating the Bradley model and everything. And I believe we're looking at a really big Bradley date coming in here on Monday morning, and that'll be a real interesting one to pay close attention to. It actually comes in on the 13th, so we'll be watching it very, very closely. Well, we've got a lot of stuff happening, too, over the weekend, so at least up in the sky, we'll see whether it's going to bring things to the upside. Now, one other thing that was brought to our attention by one of our good friends across the pond, and that is the action today in the British pound. Let me get the chart up here so we can take a quick look at it. You'll remember this long-term weekly here in the British pound comes in at the 124.60 level. We went down there. We tested it one more time back on the 26th or the 2nd of January when we had that big Forex fiasco in the Japanese yen. And we had bad news today, folks, and the pound spit it back in their face and started to rally. That's a big, big thing for the pound. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I want to mention that next Wednesday on January the 16th at 5 o'clock Eastern Time, Dave White here at TFNN is going to give a presentation on nuclear weapons for traders. Dave's specialty is ETFs and the oscillators and how do you find overbought and oversold conditions. It's really something that you ought to see. He's one of the contributors that I follow all the guys, but he's the master of the ETFs, folks. He really understands that, and the stuff that he has is really good, and it's going to be part of it about installment of machine learning because that's becoming more and more important in these markets. It's interesting to know that yesterday I was seeing that Jeff Bezos was getting a divorce, and he and his wife both worked for D.E. Shaw. That's the artificial intelligence hedge fund that it has higher security than the CIA there in Wall Street. But he and his wife met there, and boy, that is the epitome of Wall Street when you get a job there. I think they used to start these guys at around $400,000 a year, right out of MIT. Most of them came from Dr. Andrew Lowe's group that he works with nuclear, not nuclear, but financial engineering and stuff that they do there. But it's a really prestigious, just like Renaissance Capital is with Summers, Jim Simmons. It's really a prestigious place, but that's where he and his wife met, and now they are splitting up. I wanted to see, he's worth $136 billion. I'm sure they'll make some type of an arrangement. Okay, let's move on here and talk a little bit about some of these other things. Remember, this British pound, folks, has just taken some really bad news, and that is the fact that it looks like they're going to be fighting over this Brexit, and there might even go back to another referendum. We're not sure about that yet, but the news this morning about an hour and a half ago was relatively bearish. The market sold off about 60 pips in the British pound and immediately turned around, quickly. So that's something that we want to be watching. Let's one of the things that I'm watching, this is my personal, because I'm watching the stock market. I think we're topping here either today. Monday will tell us, might be today, but Monday will tell us if we're going to be. We start down sharply on Monday after this 3-week rally. We're going to go down hard. That's my guess. But if we look at this U.S. dollar index, this is where we are between this and the euro. If we get below that 90 94 level in the U.S. dollar. Boy, that means that the euro is going to be above 116. And the euro above 116 means that that dollar index is heading down, and that means the euro is heading up. Why, I don't know. All I'm doing is looking at the charts, and it's certainly telling a different picture than what they're telling us fundamentally. And I don't believe the fundamentals at any time at all, but that's what it's saying to us when you look at these charts. The Canadian dollar still, it's down 440 pips. It was down 500 pips at one time. We've had a small rally here in this the dollar Canadian, but that looks much, much lower to us in that. That's still the same. The Japanese is still setting at around that 103 level. Nothing exciting there. The fact that we had that big break 2 weeks ago and then snapped right back is telling us that, that's a major, major spot, to watch with this, yen versus the dollar. When we're watching it trading here at the 108 level, folks, back in 1989, in December of 89, on New Year's Eve, that's when the Nikkei topped at 39,000 and change, and the yen dollar at that time was 360. Now at 108. I mean, you talk about some major things happening, but anyway, that's neither here nor there. Okay, that has a long way to go. In other words, it could go a whole lot higher if it can get above that 115 level in the yen. It could really have a big move, but we don't really see that right now. I wanted to spend just a moment here to talk about the Russell, because here's one that is also lagging just a little bit. We'll bring it up here, and you'll see here that we had the big ABCD pattern from August to December. You notice that 1.618 level down there at 127. That told us that that was pretty much the bottom. That's when we were trading at 2310 in the S&P. We're now trading at 2680, up 300 points. You can see we've been straight up here in the IWM. We're very, very close to the 61% retracement off of the November high. In fact, if you take it off of the December high, we've actually made that as of yesterday. So here again, we're looking at a possibility here of at least a pullback down, possibly even a retest of that 127 level. We don't know, but this is a bear market, and we are having a bear market rally. The difference between the IWM and the NASDAQ and the S&P is you do not see a clear ABCD pattern when you scale down to a 4-hour or an hourly chart with the IWM. It's a Russell 2000, so there's a lot smaller index, and but it trades quite well. In fact, after the S&P, it's the number 2 one to trade, and then number 3 is the NASDAQ, and number 4 is the Dow Jones. So this is a heavily traded one, and we are very, very close. So all you have to do now is to see a down day here, and that would probably tell you that this top that we're possibly looking at for today would most probably be here. That's what we're waiting to see. We hit 2599.50, folks. That's it. Okay, Bob from Spokane is the Euro gaps in the U.S. Open one day and gaps down at the Open. Bob, there should not be any gaps. If you're looking at the futures, there will be gaps. But if you're looking at Euro and the foreign exchange market, which you can get free at tradingview.com, just www.tradingview.com. It'll give you all the data that you want. The futures will show gaps, Bob, because they close the market and reopen it because of, they have to calculate margins and all that other stuff. But a future is different than the foreign exchange. A future, of course, is a contract, whereas when you're dealing with the futures market, it's a contract. When you're dealing with Forex, it's a cash market. So that's the main difference there. And then they have spot contracts. We have September, June, March, December. They don't have that in Forex because it's cash. So that's the real difference. If you're going to trade that, go look at the cash market to see what the pattern is saying. You won't have to worry about the gap because there won't be any gaps. And then you can decide to trade the futures. Trading the futures is much better for small and larger traders too. Well, not too large, but if you get over 100 contracts, you want to be trading foreign exchange because they give you a better rate. But if you're trading FX at a small firm, they're going to charge you usually 2 pips to trade the euro. Okay, at 11 bucks a pip, That's $22 is your commission. They don't count it as a commission because you're paying the bid or the offer. They tell you it's commission free, but it isn't. So if you're paying $22, and then all of a sudden you can go over to the Chicago Mercantile Exchange and trade the futures, which is $5. So let's calculate. Get the old calculator out here. You're either going to pay $22 for a trade, or you're going to pay $5 for a trade. What should we do? Well, if you take the $5 route, you saved $800 a month if you trade once a day. So that's a big deal. And they get good liquidity, good stops. But as Bob pointed out here, we do have gaps in there. You've got to be aware of them. The main one happens at 4 o'clock in the afternoon when they close the Merc and then reopen it at 5. 877-927-6648. Stay tuned for Bill Meridian, Cycles Research.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Bill Meridian of Cycles Research, Vienna, Austria on the line. Bill, Happy New Year to you.
Happy New Year, Larry.
Hey, listen, my friend, I thank you for being on our show today, and I know you have something to talk about President Trump a little bit later, but how would you like to, what would you like to cover first? You know, last time we were on, you talked about the top coming in notes and also in gold. Both of those seem to have worked pretty good. What are you showing now?
Do you have my PowerPoint? Can we move to page 2?
I've got page 2 up there, which is the what do you call it? The what you're going to be talking about today. So go right ahead.
Well, very briefly, stocks have likely bottomed. Bonds are I think they're going up most of the year because the central banks have realized. I mean, they cut back a little on the asset accumulation at the Fed. They cut their portfolio, and the market tanked so quickly that I think it scared the central banks of the world to keep the lid on rates. Gold, likely topped in the third, is due to fall into mid-month. Well, mid-month is now this weekend when Jupiter is 270 degrees to Neptune, and that very frequently has led to short-term lows. In 2019, and we'll see at the end of the presentation, I think 19 is the setup to 2020, which I think is an important turning point. And let's see, US. Okay, well, I thought I was going to be on a week ago. This is dated, but 2019 is the beginning of the 2020 crisis, and the USA horoscope has a Sun-Saturn square, which was energized by the weekend solar eclipse. Now, that was last week, and I think that is what has led to the government shutdown. So if we can go to the next page, which is 3. Larry? Hello?
Got it right there, Bill.
Okay. So within the past, well, it's 17 days, there have been 2 thrusts, and thrusts, I'm referring to thrusts as the way it was done by Paul Desmond at Lowry's, because thrusts can be in breadth, but when they went to decimalization, they fouled that indicator up. They can be in price, but most frequently they're in volume. We've had 2 days in which there was 96% of volume was going into stocks that were rising. And the way it works is we had a number of down thrusts where the reverse had occurred during the decline, and now we've had 2 96% up days. And the only times this has happened, August 82, January 87, a few other times. And this one's been very powerful. It had the most up issues of any of the others in the past 60 years. Now, to get more information, if we drop the requirement for a new one-year low prior to the thrust, then over the next 6 months, the S&P has rallied 90% of the time, averaging 12%. But what is not in here is a development that has occurred just over the past few days, and it was featured by both Rob Hanna and by Jason Gopfert over at Sentiment Trader, and that is the Zweig breadth thrust indicator. That is where a 10-day exponential moving average of New York up issues, that percentage rises from below 40% to over 61.5. That's happened very rarely. In fact, there's only 8 of them since 1970. So this is based on up issues versus down issues on breadth. It's a very potent indicator. I don't think it's that distorted by the move to decimalization. So now we've got 3 fairly strong confirmations that this rally will continue going. And can we move to the next slide?
There it is.
Now this is a bit of explanation is in order. I've been using largely the S&P since 1980 because it gives a better short weekly, monthly cycle projections when you're looking at the near term and intermediate term. And I had neglected this chart, which I ran 13 months ago, based on the Dow from 1885 daily to the present. And you'll notice it caught the weak fourth quarter pretty accurately. I should have put more weight on this chart than I did on the others. Now, I left the parameters exactly the same as you see in this chart. And if we go to the next slide, that's the projection for 2019, which shows that this rally probably will not even take a breather until about the second week in March, and then it'll bottom in April and be up for the rest of the year. And let me see, what did I want to add to that? So I think, again, the timetable is off. When the market came down that sharply in Q4, I was scratching my head saying to myself, this has got to be a correction in an ongoing bull market because I don't have any serious crisis indication until 2020. So if we go to the next slide,
This is number 6, correct?
This is 6, the US dollar.
Okay. There we
This
are.
is pretty important. And I have my longest term data on this one. It's back to colonial times. That's the annual dollar. Then there's a monthly dollar that I think goes back to 1800. But both of those look bullish. I'm not showing those. What I'm showing here is the monthly US cycle projection based on the DXY. And here we see that the dollar is probably going to peak in early March and then undergo a March to June correction, which fits in with the annual cycles, and I could say is much needed. So you'll probably see a rally then between March and June in gold and in the euro as this cycle pulls back. So what are the fundamentals behind these price projections? Let's go down to 2019 trends.
Okay, just 1 second here and we'll get it ready. Okay, Bill, go ahead.
Well, number one, U.S.-China relations will be strained until April. And I think maybe I reviewed this the last time without going into all the details. That was due to the eclipse. Eclipses triggering the horoscopes of historic diplomatic relations between the two countries and also trade agreements. This eclipse that just occurred was a bad one, so relations are strained. But in July, that's a very favorable one for the U.S. and for resolving the issues. But that eclipse won't have an effect until 3 months in advance, which is April. That's how I came up with this item number 1. And I've been putting up a series. If you go to the YouTube channel, Mastering Geopolitical Prediction, which is the title of my book, I have 3 videos up there. The first one deals with China-U.S. relations. The second with the Trump birth time and why I use the time that I use. And the third one, which just went up, has to do with, it's entitled Why the President Won't Be Impeached. It's very simple. I went to the horoscopes of Johnson, Clinton, and Nixon, the only 3 American presidents to have been impeached. Of course, Nixon resigned before the process could begin. And in no way are their horoscopes anywhere close to Donald Trump's. Their horoscopes were extremely afflicted. And Donald Trump simply isn't. In fact, it's very positively aspected right through March. So after March, he'll have more of a normal year, but there are still no major hits in his chart. So in fact, it looks like a pretty good year for him. So all of this noise about impeachment, I don't pay much attention to.
Okay.
Have a break.
Bill, yeah, we're going to take a little break. You'll stay with us, Bill?
Sure, of course.
Thank you very much. We'll be right back. Bill Meridian, Cycles Research, Vienna, Austria.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, with Bill Meridian, Cycles Research. Bill, do you want to talk to us a little bit about this solar eclipse from January the 5th?
Yeah, well, there on you're on page 9.
Yes, sir.
You can see the eclipse was at 15 Capricorn, for those of you who can read charts, and Saturn was about 12 degrees Capricorn. So let's go to the next page, because obviously Saturn isn't going to sit still, it moves forward. And Saturn will go directly over this eclipse point 3 times this year. The first time is February 5th. That's February 5th, 2019. Saturn will go right over the eclipse point. Second time, August 4th, 2019. Third and final time, October 31, 2019. Why is this important? Because it triggers all the issues represented by that eclipse. So issues between U.S. and China should be especially difficult around those days, government shutdown, things like that. But it also, Saturn going over a recent eclipse point can very frequently cause very sharp one-day drops in the S&P. So there you have the dates. The first one's coming up on February 5th, so we don't have that long to wait. So if we can jump forward again, we'll get a little more information about this year. This is the 180-year cycle. If you deduct 180 years, just like 180 degrees, you will go back to, let me see, that would be 1839, I think. And what led up to it was Andrew Jackson's clash with the Central Bank of the United States. Now, 180 years later, what do we have? We've got Donald Trump's conflict with the Federal Reserve. And Jackson's clash with the Second Bank of the United States, he vetoed the recharter of the Second Bank. And here you have the whole story. The reference is down at the bottom. The country underwent rapid inflation, and he finally got the bank under control. But that did lead to an 1839 recession or deflation. So that is only 1 year off of 2020. And I actually think the most important thing in my sights looking out over the longer term is the year 2020, if you move to page 12. You have that one?
Yes.
Well, number one, we have a Saturn and Pluto are in the same place in space, 22 Capricorn 46. That'll be January 12, 2020. Well, that's an important cycle. When they were 180 degrees apart, we had the 9/11 attack, was it hit the horoscope of the United States quite directly. Number two, we have a solar eclipse at 0 Cancer 21. Well, wait a minute now. The eclipse is, when is it? It's at 0 Cancer. That is the day of the summer solstice. Eclipses that fall on the equinoxes or the solstices are very powerful, and we indeed did have one back prior to the just knock off, let's see, 9/11, just knock off, how many years would that be? 9. The eclipse that preceded the 9/11 disaster was also at 0 Cancer 21. So we have 2 reverberations of the 9/11 attack. And then, of course, we have the Jupiter-Saturn conjunction at 0 Aquarius. It's on December 21, 2020. Wait a minute, that's on the day. Jupiter-Saturn conjunction, which is an entirely separate cycle, is on the day of the winter solstice because the sun will be at 0 Capricorn. And in case you don't know what these are, 0 Aries, Cancer, Libra, Capricorn, the energy comes directly out into the world. Like if I said Hillary, everybody knows who I'm talking about. Her moon is close enough. It's about 29 Pisces to 0 Aries. And I could rattle off a whole bunch of names. All of us kids know who Wyatt Earp was. He was born on the day of a solar eclipse at 0 Aries. So we all, as school kids, grew up knowing his name in America. Jupiter will be conjunct Pluto 3 times. And my conclusion about this is, and by the way, it's not here, but let me throw in that according to the decennial pattern, years ending in 0 have the worst returns. And years ending in 2 have brought more stock market bottoms than any other years. This is how I got to be ranked 1 by Timer Digest way back in, that was 2000 to 2002 when I first started issuing the newsletter again, and I was still living in Abu Dhabi. I just knew those 2 things. So years ending in 0 have the worst stock market returns. We've been going up now since 2009. It's been due to this great increase in the money supply. So this appears to be a disinflationary, recessionary period. And economic, this is very key now. I just added this in. Economic difficulties will increase in China from March of 2019 through 2020, and the media will be most likely pointing to China as the cause. The reason is because Pluto will be going over Jupiter in the what we used to call the red Chinese horoscope, the post-World War II horoscope for China. Do you remember the Abe Beame administration in New York? It was in 1974 when the city had a fiscal crisis, and there was a picture of Abe Beame holding up the Daily News, drop dead, Ford to New York City. In other words, the feds were not going to bail him out. Well, Pluto was going over Jupiter in the horoscope of New York City. So now you have Pluto going over Jupiter in the horoscope of China. And I think that is that happens twice in 2020, but 3 times, twice in 2019. The first one is in March. And 3 times, it's a total of 5 hits. 3 times in 2020, and as Charles Jane used to say, it is the last hit that strikes the telling blow. So that's not off, that's not on until 2020. And if we could go down one more, we have the panic cycle.
Yes, sir, it's up there.
Notice where it peaks, September 2020. That is an index that I created by going back to 1600 and coding every month with a binary language, 1 for a normal month and 2 for a panic month. And of course, it's subjective. Yeah, how do you know? In the 1700s or 1800s, I had to rely on history books as to which months were panic months. And needless to say, by far and away, most months have been regular months. Thus far, since I created this, it correctly showed the peak in Greece. And I got calls from London. They said, do you think this will get any worse? I said, well, no, the panic cycle is peaking right now and declining. But I do show another peak, and the second peak was the financial crisis. Was it in Cyprus or in Malta? I think it was in Cyprus, where they shut the banks. So that's how that works. But you'll notice this, the red line is a measure of investor anxiety. And so notice it peaks in September 20, then comes straight down. And so if we go one more, for those who like horoscopes, now this is the October 1, 1949 horoscope for China at 3:15 p.m., but some people have suggested it should be a little later. And you'll notice Pluto will transit here 2019 to 2020. The same has happened in New York City horoscope way back in 74 when I lived there. And if we go to the next one, I lay out the dates here. Pluto is conjunct China's Jupiter 5 times. The 2020 crisis is likely to be attributed to difficulties in China. The news people have to have something to attribute all price moves to. So the country will be under the influence of this 224-year cycle. And you want to run the ad, and we'll give the dates when you come back?
Yes, let's do that. Thank you, Bill. Okay. We'll be right back with Bill Meridian Cycles Research, Vienna, Austria.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Bill Meridian. Bill, we have a question from one of our listeners.
Yes.
The derivation of the 224-day cycle. Where does that? Do you have?
Years.
Do you know what?
That's years.
Oh, years. 224 years. Okay. Now you get
That's
that.
one complete Pluto cycle.
Oh, it's from Pluto. Okay, great. That's what we want to know. Tell us about the book, Bill, and also how the folks can reach you.
Okay. Well, let me just say that Pluto was on Jupiter exactly March 7th, 2019, June of 2019, June 6, 2020, September 13, 2020, and October 24, 2020. It's likely the last two that will trigger the crisis, but events leading up to the crisis will manifest on the other dates. And the new book is Mastering Geopolitical Prediction, Applied Mundane Astrology, soon to be a major motion picture. And you can buy this at BillMeridian.com, where we also have the Cycles Research Early Warning Service.
Do you have any idea who's going to be the star of that film, Bill?
No, we haven't started casting yet.
Hey, listen, my friend, thank you very much for being on, and we'll have you on again. We really enjoy it, especially all of the cycle work that you do. And then we've had a strong interest in your take on the POTUS, because you've had it pretty much spot on. But the fact that you're saying that he has a small chance of not being, or a big chance of not being impeached, will make our country maybe a little bit safer for a few more years. Who knows? But thanks for being on, and we'll have you on again as we meet some of these dates out in the future, okay?
Sure.
All right. Thank you very much, Bill.
Okay.
Happy
You're welcome. Bye-bye, Larry.
Happy New Year to you, sir. Bye-bye. You betcha. Okay, folks, that was Bill Meridian. We're going to have him back again, and we'll have Norm Winsky on the 21st of January, but we won't be here that day because, by golly, guess what? That's the Martin Luther King Day, and we'll be closed, so we're going to have to shift around Mr. Winsky till the 22nd or maybe the 18th. We'll work that out. So that's it, folks. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!